Good morning and welcome to the pre-US market open update. This has been recorded about 90 minutes before the opening of the US stock markets on Tuesday, the 19th of March. Okay, I'm going to go through the ES in some detail here. And we had this peak in September last year and this WXY pattern into the December 26th low. So everyone's pretty much familiar with that, I'm sure. The question is then, what is this? And my primary expectation is still that this is corrective. I do have some criteria for adjusting that expectation, which I will go through now. But the target is this 2877 in the ES. Refer to last night's daily market update, TPA analysis of the S&P 500 for the equivalent level there. So I think we're very close to completion of this move up. And then I'm looking down, ideally, in this C wave of 4 down to the 2250 region. Okay, now there are a couple of caveats on that. Okay, this is a wave 4 at primary degree that we are probably still in. So there's another way of counting this, which is a WXY X Z. The net result's the same, except that the Z wave will not be one straightforward impulse. It will subdivide into a series of 3-wave moves, with only the final capitulation move being a 5-wave likely impulse, and giving you that awful feeling of a cliff dive and the famous Warren Buffett saying, when you get to the bottom of it, when there's blood in the streets, and all that rest of that nonsense. So the only reason for saying that to you is, don't go short and think, great, this is all going to be over in 5 minutes and I'm going to make a load of money. That's not necessarily the case, and you've got to take each step, one step at a time. So that's the primary view of the S&P 500 and the ES mini futures, is that we have a little bit higher to go still, and that then following that we are going to get the bigger move to the downside. Now I've put this support region here based on the retrace fibs of this move to here. That's not really what I'm expecting. And let me just take you through the actual alternative count. Ignore all the what looks like confusion on this chart. We'll break it down step by step for you. But this is the daily chart with this straightforward A, B, C or WXY pattern into the 4 here, with all of primary 4 being in. And lots of people obviously are asking, is that low that we saw on December the 25th the significant low? And if so, what does it mean? Well, if it is, this is what it means. I would have to give the initial move up out of it the benefit of the doubt as a 5-wave move. I'm not particularly comfortable with that, but in retrospect, if that's what it transpires to be, then so be it. With the 2 here, okay, which means that the recent peak that we saw up here at just shy of 2800 was the wave 3 in an unfolding impulse higher. Okay, now the minimum expectation for wave 5 of an impulse wave is the 2.0 extension. Okay, that's at 2890, and I would imagine with a wave like this, we would expect to see extensions to one of these higher fib levels up here, this blue level. So I've posted this chart this morning in the TPA forum. I've also posted it in the Seeking Alpha chat room. If we exceed that 2870 area in the ES, and we do so by a reasonable amount, 2890 is a bit of a nightmare, because you could just about let it get away with that as the B wave, but it would also be the 2.0 extension from this. But if we do push up here, or in particular one of these higher levels, then the balance of probabilities adjusts more in favor of this being wave 1 of primary degree, wave 5 up, which means we're going to go to 3400 or higher in the S&P 500, and it could be considerably higher, I hasten to add. But again, one step at a time. If that's what we see, if we come up into this zone, again, I'll adjust these Fibonacci retracement levels based on the actual high we get. But the next move down would be a wave 2. Okay, now while we're on that note, it would then be an A, B, C. Okay, so let's then look at this nonsense that's going on the charts. These are the Hurst cycles analysis tools. And without getting into a long explanation of Hurst, let me just give you the basics here. And first and foremost, people expect predictions that are particularly accurate based on Hurst. That is not what it's there for. It's there to define the cycles at different degrees of time, and then it has a methodology to identify when those cycles have likely completed. All right. So at this point in time, we are looking for the completion. These are the cycles here, and you'll notice they're synced at their troughs on the trough analysis, and they are out of sync at the peaks. So I've got 3 cycles of different degrees of magnitude that are looking to complete in this region, and this box actually covers the expected time zone here for the major peak of these cycles. So that's between the 25th of this month and the latest, the 10th of April. So we're looking for a peak into that period. These lines here are known as FLDs, forward lines of demarcation, and basically when price crosses below them, that confirms the peak of the cycle of that order of magnitude. Okay, so I've got the shortest cycle I have on this chart is a 16-day cycle, and when we cross back below the 16-day FLD, it would tend to confirm that that cycle has completed. And if you look, the next cycle up, which is the 30-day cycle here, is expected to peak shortly thereafter. And then finally, the 80-day cycle here is expected to peak last. Now, all of that says, we are in a topping zone here. And when we come down, what am I expecting? Well, here are the next two major troughs that we are expecting that are synced up. And the first of them is in mid to late May, sorry. So I would expect the interim A wave to come down into this trough, a B here, and then this move to come down into the May timeframe. Now, just because I'm expecting a trough in mid to late May does not mean that that verifies this Elliott wave count. The two are independent of one another, and then you look for the evidence from each to support a primary and alternative analysis. But in any event, all of this is based around trading. I keep getting questions from people about, am I an Elliottician? No, I am not. I'm a trader, okay, who happens to use Elliott wave as one of a good number of tools to assist in making trading decisions. People that are Elliotticians aren't traders, they're theorists. Okay, Elliott is a tool for traders in this instance. That's what we're using it for, same as Hurst, same as everything else. Okay, so that's what I'm looking at. Now, the other thing here is just looking at the chalk in money flow, you can see that we are coming off here, and we've been coming off since this area here. So this rise is on diverged money flow here in the daily time frame. So that's what I've got on the larger time frames in the ES. Now, bringing all of that back to where are we right now? And while we're above on this time frame, the 4-hour chart, 27.28, we should still expect higher in the ES. We've got to get back on the 4-hour time frame below 27.28 in order to confirm that we've got a relevant peak in place. Off the recent low, we've had this extraordinary move up, but interestingly, once it goes beyond a certain point, it is more likely that it is an A wave with a shallow B and a C wave than a very, very extended 5-wave impulse move. And that actually fits better with what I'm looking at in the S&P 500, where this entire C wave, so the second leg up off 2610, 2611 area in the S&P 500 of this move is an ending diagonal. And therefore, if it's an ending diagonal, the final section, or fractal, if you will, has to be in 3, has to be an ABC. So I can actually make 5 out up to there, B back here, in which case this is the final leg up of the move. But in both cases, I've got what looks to me to be a rather awkward ending diagonal off this low here. And at the moment, we look to potentially just be completing the wave 3 in that. So I'm looking for a 4 back. 2823.5 is the critical support, upper support in the ES now. If we take that out, then we need to start to consider that we may have the local top in place. Obviously, then we've got to get back through the lower support levels to confirm the magnitude of that top. But the initial level, 2723.5, while we're above there, I would not consider taking swing short positions in this market. If you do take one, based on shorter time frame futures trading and all the rest of it, while we're above there, just be cautious that it may be corrective down as opposed to directional down in the ES. And then just coming down to the 15-minute time frame and taking it off this for here, I've got this A, B, C for a 1, 2. A, the move down yesterday after the open being a B wave, then this 1, 2, 3 into the 1618, a 4 that held the 138.2, and we've just popped up and hit a 2.0 extension here in the C wave of wave 3 in what I think is a diagonal. So potentially I'm looking either from the high we've just seen, or we can go up here to 28.58, which is the 123.6 extension. So in a diagonal, you take the length of the 1, project off the 2. Then the first area of interest is the 1.0 extension for the 3. The next is the 123.6. So if we push on higher, the next levels to watch, 28.58, 28.62 in the ES this morning. If we can break back down below 28.45, then I would suggest we're coming down to this region here, with the ideal target being 28.34 to 28.30 before we then get another ABC move up to complete potentially the entire thing. Blast through that, and that alternative daily count starts to gain in terms of probabilities. From a trading perspective, what we're looking for is to get up to the highs, whether they be as a B wave or otherwise, take a swing short position using a 2 times leveraged ETF. This is my preferred instrument, and then start to analyze and subdivide the move down, again, one leg, one step at a time, looking for clues as to whether it's corrective against the December 26th low, or whether we're going to go down to that 2250 and complete all of the larger degree wave 4 before we then go much, much higher in the US indices. Okay, now daily, this is the day trading chart that we use, and we use 2 different forms of day trading charts. So what I'm going to do is just give you some brief information today on both of them, and then we'll post a couple of videos to assist you in using them in the Seeking Alpha room from now on. So this was the chart that I put out this morning, and we were here. I tend to put these out before 8 a.m. UK time. I'm based here in the UK, so the time clock that you see, or scale you see on my charts, is UK GMT. For those of you on Eastern Standard Time, we're currently 4 hours ahead of you. Normally the time difference is 5 hours once we get past the lag in adjustment for summertime changing of clocks. What we look for with these blue lines in particular, which tend to be the strongest ones, is when we get to them, is either a reaction in the opposite direction or a break up through. These are points that are important in the market in the last 36 hours. And in this case, we just pushed straight through it. That gave people that were typically UK traders, because most of you in the US would have been fast asleep, I would hope, at the time this happened. But you got the breakup and were able to go long at around 45.50 this morning, giving you a straight 8 points this morning in profits. What we tend to advocate is once you've got 3 to 4 points of profit in the ES, take half off in your futures, half the futures contracts off that you've started with. So I don't tend to scale into futures positions when day on short-term trading. I scale out and bring your stop up to your entry. So you could still be in this position. Personally, I'm not. I think we've probably seen a peak. If not, we've not got that much higher before we're going to get a bigger pullback in this market. And there's the upper support on the 3-minute timescale at 28.33. Just looking for it to stay above this 2 here and continue higher throughout today. And then we would look sorry, I'm looking for the pullback, then higher today. But while we're over 28.33, we can still just extend in this subwave. Okay, so that gives you the thinking on the ES this morning. Now, let's come over and look at CL next. So larger time frame, I'm looking at this B wave corrective up to at least the 66 region here in CL. So I've got this A wave down, A, expanded flat for the B, 1, 2, and up. So I'm expecting this just to continue to grind higher for a good number of days to come now, up to our target region. Minimum target for this is 65.91. Maximum that I would expect to see is 72.57. Okay, before we then come down. So we've got swing long positions in both futures and also in the 2 times leveraged long ETF for CL. And I think Brian posted yesterday in the SA room the add to those positions as we broke out and confirmed that we're now in the 3 of 3 up. So that hopefully has given you an early trade with us for those of you that have chosen to follow us in this room. And what we've got off the last 2 here is this 1, 2, 1, 2, then a 1, 2. I'm looking for the 3 to extend up now. We're right at the initial resistance of 59.80. I'm looking for it to push through there to 60.55, then hold that 59.80. The level I really want to see held from now on in is 59.07, while this then just subdivides higher in this third wave here, and ultimately up to the 66.27 area in this leg. So that's what I'm looking for in CL. And then just bringing it down to a 15-minute time frame, it's a bit clearer. There's this 1.0 extension. Those are rules of concern. We need to get through them. You tend to expect a pause as it's the 3 of 3 of 3. But I'm just looking for this to push up. And this 764 is the 59.07 that we're looking to maintain price above from now on, and we mustn't come back below this level here at any point in time from here on in CL. Okay, so let's now come over and look at not GS again, sorry, GC this morning. And GC is starting to push up a little stronger and a little higher than I would have liked here. We're right at the 887 retrace of this leg down. So if we are going to get a 1, 2, 3, 4, 5 here, then it needs to turn down below 1311.6. Now, if we see it push up through there, then just coming to the 4-hour chart, these red fibs here, 1323, 1334, 1341, and we do tend to get fairly high pullbacks or deep pullbacks in the metals. So it's possible that this is the A wave down here in GC complete, and we've got an A, B, and we're just going to get a C wave up to, I think, at least 1334.7 and possibly as high as 1342 before we then get the next leg down in GC. And again, just one step at a time in this thing. I did go through the possibilities both last night and yesterday morning with you. I'm looking for an A, B, C into at least this region, and that's giving this the benefit of the doubt of being directional rather than corrective. I don't personally think it is. I think it's more likely we come down here, and the final complication is we could just pop up and make another high before we then correct. And if we do that, that would actually change the balance for me in terms of favouring the next move down as being corrective off last August's low, or the rise off last August's low, rather than looking for this level down here at 1109 in GC next. And then coming down and looking at our day trading chart. So again, this is where we were this morning when I put this out. First trade opportunity, we came up through the orange line and retested it. There was trade number 1. You went up through the blue line. Now, this counts, and you get this when they get difficult as a retest. And once you started to break out above, then you look for the next long. What we also look for with our day trading is volume spikes. And you'll notice here we got a volume spike. It indicates typically a peak or trough. Doesn't mean it's a peak or trough of a wave or that the move is over. It just tends to mean we're going to get a pullback. And if we get a pullback, then it gives us an opportunity to take a trade. We get the move in our direction, so it gives us an opportunity to take a little bit off in futures and put our stop to entry, so that if we get lots of little stop outs in our futures trading, they tend to be profitable rather than non-profitable if you use the right indicators. Now, the other thing I just want to, oh sorry, NG finally. Okay, so here's the 4-hour chart of NG, and ultimately I'm looking lower. I'm still looking for a move down to 2104 in NG to complete a larger degree wave 2 before a much bigger move to the upside. However, at the moment, off this low here, I've got an A, B, and I'm looking for the C wave up to at least 3061 while we're above 2732 in NG. And in fact, we want to see it stay now above yesterday's low at all times from here on in as we push on up in NG. And just bringing that down to the hourly chart, let's just scale that properly. So you can see that yesterday's move down, we actually went long in our live trading room here on Friday afternoon, dropped down into the 764 retrace of this leg up yesterday and rocketed out of it. I'm looking for that just to continue on up now in a series of 5-4-5s into the target zone in NG. And what I'm looking to do later today is move the stop up to here. Those of you that want to do that, it's a perfectly sensible thing to do now if you so choose, and then just let it play out or not. But either way, you're in a can't do anything but make a profit situation with us. It's just a question of how big that profit is from here on in. And again, day trading chart that was put out at 8 a.m. UK time this morning. So that was put out here. First clue was we came up through the orange line. There was the bust up through the blue line, and we continued higher. Now, let me just bring over charts. This is a set of charts and indicators I use on TradingView. And all of this that you see in front of you is available on the free version of the TradingView platform. There is quite a detailed video in the education section of the TPA website, and I'll ask Brian to post that in the Seeking Alpha room so that you have it, showing you exactly how to set all of the indicators up on this chart and exactly how to use them. So this is a futures version of the S&P 500. It kind of mirrors the S&P 500 cash price, but takes its movements from the ES mini futures. These are the blue and orange lines transposed onto it. This is something down here I use. It's a momentum and squeeze indicator, and the two time frames are 15-minute and 3-minute side by side. And I use this for all day trading and in shorter term swing trades, and all for all entries. Here you can see these red dots is a squeeze building up. When we get a green dot and a momentum directional thrust, that tends to give us a trade entry. So you can see we could have got a trade entry right off the orange line here today, but what it did mean was as we were coming up through this blue line, there was the clue and the information that was required to say, look, this isn't going to reverse here, don't short it here, go long. And therefore you can see we went from 39 to almost 49, giving you a 10-point trade in the ES or S&P 500 spread bets in the UK first thing this morning, which is a lovely way to start your day. We did similar in the German DAX this morning and had a very profitable trade on that first thing this morning here in the UK as well. But as I say, I'll post the video on those in the Seeking Alpha room. I'll see if I can get that done a bit later today. And finally, to take a look at Bitcoin, which is literally going nowhere still. So I'm still looking, as we said last night, for this move down here to complete a B wave before we then get a C of the 4 up. But I do think the entire move up off the December 2018 low is more likely corrective as a wave 4, with a final move down to the 2400 region in Bitcoin still out there. Trading this thing at the moment is just fraught with frustration and dangers, to be honest. If you're going to trade it, I would wait for this. If we get it, let it come down, hit and hold the fib and bounce, and then use the fib for your long entry in Bitcoin. Other than that, those of us that have been following this for a while are long on a non-leveraged basis in various cryptocurrencies in any event, providing we remain over the pullback low off the rise off the December 2018 low, then those positions will remain intact. Okay, that's it from me for this morning. Good luck in the markets, and we'll keep posting updates throughout the session.